this specific live stream, if you could just repost it. That way, no one's like, hey, didn't say this or didn't say that or whatever. We have to talk about it. It's important. This is an important moment in the market for you as a participant. Even if you're a seller, there's a lot of important information you need to have for where we are and what's taking place this morning. Sometimes I'll say these things and we come back and people say, yeah, you said this. And we're going to look at December. Let's see if we can look at December really quick. I think the 30-minute chart is fine for December. We're going to look at December. Hold on here. We're going to go to a full trigger screen. I think it was December. Yeah, right down in here. Right here. I said December. Matter of fact, I think this is the December move right here. I want to talk about two important time frames. We can actually look at, so this is December right here. This was actually it. I think this was the big one. This was the big one right here. I don't know if you guys remember that. This one right here. And then this one right here, too, is kind of big as well. Now, we can look back over here. And we're going to talk about, when is this right here? This is March, right? So let's start back here, okay? So I want to, it's easier to show this on a daily chart. 1-day chart. Let's look at it on a 1-day chart. This is a 1-day chart here. We're going to look at, I don't know if we should look at SPX maybe. Well, we can do it. Maybe it's better to show on SPX. Okay. Right here. Now let's look back in time here. And whenever we break below, whatever price breaks below, or not price, whenever the daily trigger crosses, whenever the daily trigger crosses the monthly over here, right? Watch right here. Now we go into a risk-off type scenario for major downside moves. It's very, very dangerous in here when we break through this. So if you're watching this cross, nope, not that cross, that one right there. That usually signifies high risk to the market for major downside to come. Now, we don't always have follow through. You can see this pullback up here. We got above, right? Bounced around, started rocketing off. Came back down to check it. And then we're off and running again. But you have to think about it, okay? My point here being that, see, you got the cross right here. You see that cross? See the first cross with major move down. Came back up. A cross here, right? So this is a time for warning. Not necessarily, hey, we're going to crash, but risk off warning, okay? So you get the other break is right here. You're automatically in a risk off warning. Now, if it resolves itself, everything is fine, and you don't have to worry about it, okay? If we rejected to the downside, you would have been warned in case if you had more downside to come. Does that example make sense to you at least? And then when we're over here, I'm going to show you some other examples of this too. You get the big cross right here. You get the big giant cross here, and then a bloodbath down. Same thing over here, bloodbath down on the monthly trigger. Same thing over here. Major slam, 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 violent, high volatility moves, right? And then you can also see it right in here, right? Like wham, 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 right? The risk off the warning is taken off, and we rocket ship to the upside. So this isn't to say because we're here. This isn't to say that we're going to crash, doom and gloom. But when you get the yellow line crossing that orange line, it leads to high volatility. So when you're looking at this cross that's taking place right now, see that yellow line crossing the orange line over here? When this cross takes place, what happen? It triggers three things. It triggers extreme volatility. It also triggers a risk-off warning. It needs to be confirmed. So when we're down here trading this right here, hold on here. When this happens, right, what it leads to is volatility, major volatility. And what the sellers are going to be looking for here is whatever this move is down, if it's to the monthly, if it's below the monthly, doesn't really matter. What really matters is the swing high. If that gets rejected, it's going to lead to some pretty big destruction in the marketplace. So we have a risk-off warning. It's not confirmed yet, but you're going to be looking for it. So I was talking to Joe this morning about it. Let me see if I can. I'm going to write some stuff out here on the screen for you so this is clear as day, okay? This cross right here, right? So the cross of daily trigger below weekly trigger brings risk-off warning. The other thing that you need to understand about this, though, is it will still need to be confirmed. And if confirmed, you will likely be offered. You will likely be offered an exit strategy. We'll leave that up there like that. So cross of the DT below the WT brings risk-off warning. Will still need to be confirmed. If confirmed, you'll likely be offered an exit strategy. And what this implies here is that none of this matters. Okay, it's not going to go straight to the depths of hell. What it's going to do, it's going to bounce, right? And it's going to ricochet up. So regardless of where that bounce is, you would still need to confirm it here. Does that make sense? So you've got the move down over here, right? You'll have a swing high and then a blast down below, and then you'd get the rejections and all that kind of stuff. Start pinning up here, rejecting, and we start looking for the next available level, and that is going to be on SPX 3470.87. So none of this is good. This is very unhealthy. As a matter of fact, it's going to also matter how we close this week out. Do you see? I want you to see this here. You see this orange line right here. When we close this week out, you'll start to see the orange line head lower. You'll see the daily trigger begin to race down next week, and we'll begin to make some violent moves up and down. Now, the caveat that I was talking to Joe about this morning to this would be the one caveat to this morning that I wanted to leave Joe with was even with this alert of a risk off, you're going to likely, high probability, you'll likely be giving a chance to exit, long or short. Listen to me closely on this, long or short. So if you are a seller or a buyer, it's not going to really matter. What does matter to you is that, let's say you're short right now, right? And you're like, everything is awesome. We're going to crash this, all this stuff. And if the market turns on you and it starts to rip higher, you're likely going to see us come right back down again. If you're a bull and you're like, hey, I'm trying to buy this dip down here, and you get caught in it, you're likely going to see the market rip higher. And let's say you're upside down or something, you're going to see it rip higher and give you a chance to make some money. So maybe I'm describing that wrong. The key point here is as this volatility will increase, you're going to be given chances, if you're in the wrong, to be in the right regardless. Does that make sense? So long, short doesn't matter. You're going to see violence from this point forward, and you're going to see some wild-ass moves. If you are a seller, you're still waiting for that 430 rejection or even slightly higher. We could blast above that 430 and then, but still come back down and check 430. And if that check doesn't hold, that is the boom, exit the market, get the fuck on out. Things are going to get violent. And we're going to go back to January of, we're going to go back to January here. We're going to go back right here really quick to January of 2022 as a fine example of this. So you've got the initial roll here, right? Watch this cross right here. Do you see that? That's the cross. Do you see how price? Do you see how price came back up to check it? Look closely here. You get the bloodbath down, right? Whoop. You get the squeeze back up over here, and then the rip down. This is still a daily chart on SPY, by the way. Some more blood down here, but the key point is it's a giant liquidity grab right here. But you still have the cross is still viable, right, on the yellow and orange. And that's where things got really nasty. If you were in the market in January of, my point that I'm trying to make to you here is, if you're in the market long, I wasn't at this point, but if you were long at this point in the market, the key driver would be that once this trigger started, right, bam, once that started and you're like, oh shit, I'm going to cut here, right, I'm going to cut, panic sell, there was still one more opportunity to exit the market actually near where you were before. Do you see that? Like way back here in December. So if you're a bull, don't panic. It can still resolve to the upside too, even though this went down. Had price gone higher, you would have had an opportunity to reposition again to the upside. So the only key thing that you need to know here right now is that we are definitely risk off, waiting for a confirmation. Now, I do want to show you this December area here. I think this was December. And we had the same kind of a situation over here. We resolved to the upside. Same thing over here. Hey, we're going to crash. Resolve to the upside. So what you don't want to do is this. What you don't want to do here is you don't want to, panic sell this, right? You're like, oh shit, Cap saying we're having a crash warning. Right, you panic sell this, we squeeze way back up here, even higher, and you could have gotten out way up here. Do you understand what I'm saying? Even if it's going to continue to the downside. So don't be a seller here, be a seller up here. I need to impress upon you the importance of where you are a seller. Does that make sense? And also impress importance of, let's say if you're like a bull if you're a bull wanting to sell right here, you should have been a seller here. If you're a bear and you were selling this, you still have that chance to come back down over here and not get caught down here. Does that make sense? So just be I guess the idea is the swings are going to be wild, and whether it resolves to the upside or not. Let's say you're like I'm short right here. You'll at least be given a chance over here. With resolution to the upside, to exit here rather than up here. If you're a seller here, get squeezed up here, you'd stay short until that happens. So just don't be the wrong time trying to sell. But at any rate, right now there is danger in the marketplace. Absolutely, 100%. Have we broken trend? No, we have not. If you check trend right here, you see this low right here. We still have not broken trend. So trend's still alive to the upside. Bulls have hanging by a string. But bears are definitely, see that blue line right here? Bears are definitely going to want to smash down into this, create as much panic as possible and fear, and then get that giant squeeze up for that continuation to the downside. So just be aware of the mechanics of how this works itself out and what it can lead to. It can lead to some major downsides in the marketplace. Do not ever take a cross of this yellow and orange line as meaning nothing. It means a lot. It's a severe expect wild shit to come from this point forward. So I need you to at least understand that the power of that move can be seen today, tomorrow. Just this cross right here. This is a 1 minute chart right here. Just this cross right here is extreme bearishness and extreme bearishness in the marketplace. Now I don't know what's setting this off. I'm not that I don't. I'm assuming that it's front running an anticipation of the end of rate hikes. So these banks are going to front run this shit early, and they don't care. So I'm assuming you're thinking that process is going to take 1 month, right? If you're a seller or a bear, you're probably like, hey, we're going to crash today or this week, and we're going to restart the market because I'm positioned short. The process should take into at least springtime. Should take from now into, so then what are we in right now? We're in November, basically, right? So next 2 months and then another 3 months, that's 5 months of downside action it's going to take. But you need to, at this point, be prepared for that downside action and to be selling any and all rips at this point. So if I were to say, hey, Cap, do you have a bear suit on today? I don't, but I will. So my bear suit will come on above at that 430, 440 area. If we can roll that back down, it's going to become sell the market. So the bear suit is standing by, I should say. It's not like I'm not wearing it right now, but I'm going to be wearing it here very soon. The next month or two, you're going to see the full bear come out. So be conscious of it when it's happening. Back when we were streaming back in September, October, November of 2021, and I was telling people, hey, this is the time to get out, right? And now start to get out of Apple, all the big ones that the banks were supporting with corporate debt bonds. I was like, hey, some of this might get held up, and it did. It kept squeezing up into the beginning of the year. But then we finally got that roll in January, and we got the confirmation heading into, I believe, April or March or something like that. And then the real selling started. So this should be a process. Should be 2, 3, 4, 5 months. Anyone out there that tells you, like, hey, crash today, Black Monday, any of that stuff is wrong. They are wrong. It normally takes time. Even in COVID being like a major moment in the market, we still had major squeezing that took place for those confirmations. That big roll that happened in COVID, where there was still giant squeezes up, and then we confirmed it to roll over. I'm not going to expect a COVID type of roll. You know, there's no reason for there to be that kind of a crash, fundamentally or technically. But be aware of it. Okay, so if you're a market participant, if you're a bull out there, right? I need you to. You guys know I'm a bull. I need you to know that you are being set up right now for a confirmation. You're being set up right now for a confirmation of the market to crash into February, April of next year. Now, it could take even longer. It could take the entire year, believe it or not. But if you're a bull, your only thing that you're doing at this point is looking to sell 430, 440, something like that. You're looking for that. If you don't see the will from buyers to step in up there and reverse it to the upside, you are not a buyer. You are risk off at this point with cash in the market. If you're a seller, you have the potential to have an extension to the downside. I've got this gray box over here. You've got an extension possibility down to 406.59-ish, somewhere in there. An extension of the downside right now. You likely don't get it. It's really overextended. But if you're a seller, your biggest thing here, like the thing that you need to here's a piece of advice to you if you're a bear. Bears, you know I don't dislike you. I know people come off saying Cap doesn't like sellers or Cap's always a bull. But if you're a seller, you know that I don't dislike you at all. You know that I tell you exactly what you're looking for. If you're a seller, you are at this point, regardless of price where we are right now, you're looking for that confirmation. It is key for you to get that confirmation it is key for you to get that. Like you're going to say, no way, Cap, I don't want that. But let's talk real truth trading here. You need the squeeze back up and then the rejection. And that what that's doing is confirming to you that it's confirming to you that we're going to have a liquidation on a much higher time frame, on a 1 year, believe it or not, time frame of accumulation. So we're going to go from a accumulation to not consolidation, but distribution on a 1 year time frame. Okay, and so you're looking. So that's your thing. If you're a seller, don't be drinking the fucking Kool-Aid out there and being like, yeah, my friends are telling me crash, Black Monday crash today or Black Friday crash, and that kind of nonsense. Don't be listening to that shit out there. Stop drinking the fucking social media Kool-Aid. You need that confirmation. And so when you see it, if you see it in the next few weeks or the next 4 weeks, that rejection up there at 430, 440, something like that, you see the buyers don't have, you see the squeeze, and then you see that the buyers don't have the sentiment or the will to want to buy the market, you're likely going to see that market reject there and begin a steady decline over the coming 5 months at minimum. It should take until about April. So what's that, 4 months and then 2 more. So I said 5. Well, let's do it 6 months. It should take about 6 months, 3 to 6 months, somewhere in there, depending upon when the panic really begins. You won't see panic today either. I don't want you to think by this warning that you'll see like true panic today. But the true panic will kick in as that 430, 440 rejects. You'll then see the selling go below the monthly trigger. And that's when you're going to start triggering long-only funds to begin to hedge massively. That creates the waterfall puts. That creates the forced selling by major institutions. And you will see that cascading downside waterfall. So we failed to get a new high on the year, right? On 2022, we failed to get the new high this year. We are now starting to we have the official cross of the daily trigger over the weekly trigger. That triggers the warning immediately. And now we're just waiting for that confirmation for a liquidity grab from the upside to begin to make that staircase move down. Now, if you want to like pregame that, if you're looking to pregame that right now, or what are those targets in the springtime, I can give them to you right now. I can give you the actual numbers as of right now. They change over time, but I can give them to you with some kind of fair expectation of where we're going to go, from historical examples going all the way back to 1890 with the tool. So if you have access to the tool, you can already see these things. If you feel like you are missing out or something, or you missed this move down, you have not missed it. There's so much more down to go. And we're going to talk about something else here too. So if the bears get their confirmation, right? If a seller gets their confirmation up here, we begin to head lower. If they get that confirmation, you are guaranteed to see, you are guaranteed at minimum to see a retest of this prior low from October, I believe, 12th. That will be 34.9665. Historically, and not only historically, but if you look at Wyckoff type stuff, if you guys are understand Wyckoff in any way, shape, or form, this failure of the new high up here and this retest down below has a high probability of breaking below even lower. So had bulls gotten the new high and failed, there would be a low probability of breaking this prior low from October. Does that make sense to you? So had we gotten a new high from 2022, we had traded up here, you would have had a high probability of retesting this at most and then get and go. The failure to get the new high signals that not only will you test this here, but you will likely break below it at some point, even if we squeeze for liquidity. and retest an even lower low. Now, currently that's at 28.14 in the quarter. But if you figure if we were to hit this by Q2 of 2024, 26.18, 200 points, that would put a target of springtime of 3,000. So let's call April a target of right about here. Right about there is going to be your target for April. Right around 3,000. So by April 30th, something like that, if we get a confirmation of, if we get this confirmation up here that we're going to begin rolling, you should expect 3,000. Now, that doesn't mean, hey, Cap, should I buy like puts here for 3,000? Fuck no. You buy them on the confirmation above. If we start to roll that if we start to reject this up here and confirm that move down lower, up here, fuck yeah, you put the 3,000, or 3,500 or something, with a like 3,500 with a target of 3,000 in April, to the downside, and the bears will have the greater probability of not only you're going to get a major test of this, but then you're going to still likely roll down and get 3,000. So bears, congratulations. If you're a seller, congratulations. You're 90% of the way. You're 90% of the way towards that major roll. And not only that, if bulls were looking for bulls like myself, because I was and am looking for the low to be just a recheck of 3,500 at worst, right? Like, we don't go back and visit a new low in the market. We're going back to visit 3,500, no big deal. I can accept that, but right now, we're not setting that up. Right now, we're setting up a new low below 3,500. So there's probably two things that you need to know. Number one, we are in a risk-off warning. You need a confirmation, though, above at 430, 440. So those are the two, number one and number two, right? Number three, due to not regaining a new high of some point this year, you are going to be looking for a new low at this point, not 3,500, but likely 3,000. Whereas you probably weren't looking for a new low if the market had attained a new high on the year.